$20.98. That is what Goldman Sachs just posted in diluted earnings per share, nearly double the $10.91 it earned this same quarter a year ago. That is about as good as a headline gets, and the market went down on the week anyway. Coach B here. This is last week in the markets, where we look at what actually happened and pull one lesson out of it. Two of the best pieces of news you could ask for landed in the same 5 days, and stocks fell regardless. Let's get into it. Let me set the scene. Tuesday, the big banks kicked off earnings season. Goldman Sachs, ticker GS, posted that $20.98 a share, net revenue of $20.34 billion, and a record quarter for global banking and markets at $15.52 billion. JPMorgan, ticker JPM, reported diluted earnings of $7.70 a share against an estimate of around $5.44. That is not a small beat. That is a blowout on firm-wide revenue of $57.3 billion. That same Tuesday, we got the other piece of great news. June's inflation report came in cool. Headline CPI fell 0.4% month over month, the biggest one-month drop since April of 2020, mostly on energy prices dropping about 5.7%. Year over year, inflation came in at 3.5%, down from 4.2% in May, and cooler than the roughly 3.8% that was expected. Core inflation, 2.6%, a genuinely good inflation print. So here's the part that should confuse you a little, because it confused the bond market too. If inflation is cooling off, you'd expect interest rates to come down. Instead, the 10-year Treasury yield rose to about 4.57% by Thursday. Good inflation news, and yields went up anyway. Here's the reason in one line. There's an escalating situation around the Strait of Hormuz that pushed oil sharply higher this week, and higher oil feeds right back into a higher for longer story on rates. The bond market looked past the cool CPI print and priced in the oil risk instead. Now let's look at what all of that did to stocks. The S&P 500 through SPY was down about 1.5% on the week. The NASDAQ 100, the Qs, actually led the market lower, down 4.2%, which is the exact mirror of what we saw the week before when tech was leading to the upside. Small caps, the IWM, were down about 0.7%, and the Dow was down about 0.9. And the VIX, the market's fear gauge, jumped about 12% on Friday heading into the weekend, closing at 18.8. Good earnings, good inflation data, and fear still ticked up. So let's run the winners and losers, because there's really just one winner on our board. Palantir, ticker PLTR, was up 4.4%, showing real relative strength while almost everything else sold off. Everything else was red. Rocket Lab, ticker RKLB, down 16.6%. The SpaceX tracker, ticker SPCX, down 14.7%. Supermicro down 14.6%. Moderna, ticker mRNA, down 9.4%. Broadcom, ticker AVGO, down 7.3%. Tesla down 6.6%. And even Nvidia, last week's AI leader, gave back 3.9%. Notice that the names that led the market higher last week were some of the names giving it back this week. Let me show you the cleanest example on a real chart. This is Broadcom. Last week it was the story. One of the strongest names in the whole AI and chip trade, leading the tape higher. This week it fell 7.3%. There was no bad news on Broadcom specifically. It just got caught in the same current as everything else. Good earnings and good inflation data running into a rising rate backdrop, and even the best stock on the board pulled back with it. So here's the teachable moment, and this is the single most useful idea in the whole market. Great news is not automatically a green light. Goldman crushed it, JPMorgan crushed it, inflation cooled off, and the market still fell. Why? Because a lot of that good news was already priced in before it even printed. And the macro backdrop, in this case oil and rates, was pulling in the opposite direction. This is the classic sell the news setup. The question is never just, was the news good? The question is, was the news better than what was already baked into the price? And is anything bigger fighting against it? Answer both, and you understand a week like this one. Answer only the first, and you get surprised by it every time. That sets up next week. The mega caps step up, with Tesla and Alphabet both reporting Wednesday, And it's actually a quiet week on the economic calendar, sitting right between this cool CPI print behind us and the Fed meeting the week after. If learning to tell priced in good news from an actual green light before it costs you is the kind of thing you want every week, subscribe, and Last Week in the Markets will be right here for you each weekend. Quick reminder before we go. This is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. Every ticker here is just a teaching example. That is the week. Good luck in the markets, no matter what stock you're into.